This is DBrief, brought to you by the Australian Industry Group.
Hello and welcome to this series of special episodes of AI Group's DBrief podcast. DBrief is designed to give you insights into the impact of policy on your business. In these mini episodes, we'll be talking about the kinds of policies we want to see for members in the upcoming federal election, and in this case, also the federal budget. Today, I have Jeff Wilson, AI Group's Head of Research and Economics, giving a rundown of our pre-election policies as well as our pre-budget policy. Welcome, Jeff.
Oh, thanks so much for having me, Louise.
Now, Jeff, every year we do research with our members to understand how they're experiencing the economy and what they expect to see in the forthcoming year. What have they told us this year?
So just at the end of the year, AI Group surveys all our members across industrial sectors to get a sense of what their thoughts and feelings are for the next year coming. This is the 12th year that we've done the survey looking out to the 2025 industry outlook. And the results this year were fairly poor. Businesses have had a particularly tough time over the last few years since the pandemic, dealing with a lot of labour and skills shortages, inflation and cost of doing business pressures, as well as some fairly weak market conditions in Australia as the economy slowed. And those negative sentiments have really affected Australian boardrooms and business decision makers for next year. Businesses report to us that they're very concerned about costs for their business, particularly for wages and input costs with inflation. They're also quite struggling with supply chains, an issue that had been a problem during the pandemic, relieved a little bit, but is now coming back to the fore with the threat of trade conflict and trade war, and also the levels of uncertainty in the world at the moment, with a lot of global disruption, big movements in global markets, and big concerns around how they can invest securely for the future, given those cost pressures and the uncertainty in the markets they're seeing.
And given all that uncertainty, is that already having an impact on investment?
It certainly has. So we've taken kind of a measure of investment intentions for businesses over the next 12 months for the last decade. And these are at the lowest levels that we've seen for a very long time. Businesses have backed off on all of their types of investment, technology, training, R&D and CAPEX. We've seen particular falls in reported intentions to do R&D. A lot of businesses are saying we're struggling with cost pressures, we're struggling to get staff and get the right staff for what we need. In some industries where there's new technology being taken up, particularly areas of digital and AI, we're also having a lot of pressure digesting those technology changes. And so at the moment, one of the things that falls onto the back burner is research and development. It's kind of a long-term play, not a solution to the short-term problems.
So the trigger for this DBrief podcast, the entire series, is the policy and business impact of what we call the 3Ds, digitalisation, decarbonisation and diversification. And unless companies can address all three at once and governments can address all three at once, we're not actually going to have the economies and the businesses of the future that we hope to have. So it sounds like with all those pressures you've outlined that this upcoming election and budget is really pivotal as part of our ambitions for the future.
It certainly is, because a lot of what businesses are saying is those short-term pressures are dominating our thinking. We're responding to that. But while we're dealing with some of those, for example, cost problems, we don't have as many resources or time or attention to dedicate to what does our business look like in 5 or 10 years' time. We're trying to get through the next 12 months.
Thinking of all that, I mean, the recommendations we put forward then, we're really trying to turn the Titanic, outline some of the key ones that we hope the government will pay attention to.
Well, one of the core ones is definitely cost of doing business issues in Australia. Look, there's been a lot of public attention on cost of living issues, and this has certainly been pretty bad. Consumer prices over the last 3 years have risen by 19%, and that's really strained household budgets. But interestingly, business costs have risen by exactly the same amount. So as much as Australia has a cost of living issue, we also have cost of doing business problems as well. It's particularly important for AI Group members because some of those cost problems are considerably worse in industrial sectors. So for manufacturing inputs, things used by manufacturers, prices are up by 30% in 3 years. And for construction companies, 33%. And gas prices, 51% in just 3 years. So this is really eating into business margins and their ability to have the levels of financial security and profitability that they can think about making investments that have a longer than 12 months time horizon.
So in terms of addressing those gas prices, we've got our environment and energy policy paper, which people can also have a look at and listen to that podcast. But more broadly, is there any way we can reduce these costs for Australian businesses?
There's a number of things that have been driven in with regulatory and compliance costs that have unfortunately contributed to some of that blowout. And we certainly see this as intersecting with productivity issues. When you look at productivity in Australia, it's been fairly poor since the pandemic. In fact, the labour productivity today is exactly the same as it was at the start of 2019, which means we've effectively had 5 years of no productivity gains at a macroeconomic level in Australia. But when we unpack that, what we can see is there's a group of industries that have really been part of the problem there. And we see this as in industrial sectors, where productivity has gone backwards in utilities, in manufacturing and construction, and has been pretty weak in transport and the wholesale trade industry. A lot of those productivity industries that are having a really hard time raising productivity are also the ones that are subject to some of the most onerous regulations. These could be product regulations, they might be workplace regulations, they might be some environmental regulations and issues like this. But there's a clear relationship with the degree of regulation and the degree of productivity improvement that we're seeing in industries. So one of the things that we've gone into this year's federal budget asking the new government to do is really look at how a process of regulatory reform that's targeted at those high regulated, lower productivity industrial sectors would be able to take some of that regulatory burden pressure off the cost side for a lot of businesses.
And of course, some regulation is useful because it creates a level playing field, it keeps consumers safe, it rewards, good companies. But I think what we're finding with regulation is this abdication of responsibility by a lot of governments and the insertion of regulatory monitoring within supply chains and breaking into commercial relationships. So things like modern slavery, this new carbon accounting standard. And I think that, from my part, if a government was introducing those regulations, they would have some consistency and they would have a regulatory impact statement. But, if you're a big customer, and you've got not multiple suppliers, you'll be just asking them the information that you require to manage your risk rather than having a uniform form or process that companies can rely on.
Well, stability also helps because whatever regulation is, businesses can get used to it, they build their processes around it, and they can do it year to year. And we're seeing in a lot of areas just the rate of regulatory chop and change is almost out of control. Certainly there's revisions to building codes and product standards every year or every second year. We've even seen just a lack of clarity in some parts, particularly in employment and industrial relations, where there's still a lack of clarity in Australia around what the definition of a casual employee is or what the definition of a labour hire employee is. And there's been a number of companies who in good faith have fallen foul of rules simply because the legislation isn't actually specific enough. That puts cost onto the business that's complying, but it also contributes to the supply chain problem because if you're not sure what the regulator wants, you're probably going to ask your suppliers for 2 or 3 times as much information just in case. And then they have to go down the supply chain. So you have this concertina kind of expansion of regulatory burden that's got no connection to what the good intention behind the regulation at the start was.
So anyway, regulation is certainly going to be one of our hot topics in the next year or so, I think. What are the other recommendations we're putting forward?
Well, a large one for us relates to the tax system. So Australia hasn't had really as much tax reform for a very long time. There was the Henry Tax Review in 2010, did a kind of root and branch, they say, review. And here we are 15 years later and we've still got the same system that we decided was not fit for purpose 15 years ago. A couple of things that we would point out, because the tax system is very complex and affects everyone in society, but from a business point of view, some of the issues are that Australia's taxes are not competitive on an international level. We have the second highest corporate tax rate in the OECD, and that's double the United States. We've got a very complicated tax system where there's different tiers and lots of deductions and exemptions, And that creates an additional compliance burden of just working out what tax you're supposed to pay. And we've also got a big tax take that's been coming from state governments, particularly after the pandemic when they incurred a lot of debt that they've had to try and recover some of those costs. So all of this has really created a system that's uncompetitive, overly complex, and has too many tax hands coming in. And this is really distorting businesses' decisions. We certainly see a lot of companies saying we're making investment decisions based on how we can navigate the tax system rather than what we think we can build as an effective business in Australia that's going to be globally competitive. So what we've said is when tax reform comes, and there's always tax changes in the budget, that these need to take these three principles in place. They need to be simple, they need to be internationally competitive, and they need to be productivity enhancing. If you use those three rules, that's a good way to see what a good way to change a tax system is going to be for business.
And that international competitiveness is really key because, as a country, we've relied on foreign direct investment for a lot of our, sovereign wealth, including our exports. I think 40% of exports are based on foreign direct investment. So certainly the feedback we get from a lot of members is that we're not competitive internationally, and it is making decisions in overseas boardrooms on how much they can invest in Australia.
The global uncertainty also affects this problem because Australia's largest source of foreign investment has been the United States, really since the 1960s. And given some of the changes in the US economy, a lot of economic nationalism from the Trump administration, trade's attracted a lot of attention, but this is happening on tax, it's happening on investment, it's happening on regulation, is really going to see a lot of US capital look to invest in the US, which means there's going to be less available to go anywhere else. Australia may not necessarily ever want to adopt the US levels of taxation, but certainly when American multinationals are going abroad, we need to think of where else they might be going. Are they going to Asia? Are they going to Europe? If the pie is declining in size, how do we make sure that we defend our piece of that pie? So in addition to all the trade issues, we really need to think about tax in terms of whether we're going to be able to continue to get those big foreign investment flows that bring money, but they also bring technology and they also bring marketing channels into the countries that they're going to. Without those relationships, we're really going to struggle to participate in global supply chains at a high-end stage of the supply chain.
And in addition to the work that AI Group does domestically, we're also very involved in B20 and G20. But I'm not sure that the G20 this year is going to have that much impact. They always talk about tax and trying to make sure that there's no, leakage and, there's no race to the bottom. But I don't know what you think, but to my mind, this year is not really the year for a robust and ambitious G20 conversation.
And that might be true for a lot of international institutions. Like Australia has gone with, since the post-war period, we've been a big supporter of the rules-based international economic order, WTO, the IMF, more recent organisations like the G20 that came out of the global financial crisis. Even in public health, the World Health Organization. And we've been a really committed multilateralist. And like it or lump it, a lot of those institutions are suffering a lot of problems, particularly from US withdrawal from a lot of those agendas, which is creating a leadership vacuum, a funding vacuum, and a attention vacuum. So we may need to go it alone on some of those big reform questions in a way that we haven't in the past.
And when we look at the behaviour of many countries, who are sort of absenting themselves from these multilateral, they've got very deep pockets and so are injecting a lot of money into their economies. We've asked for some fiscal sustainability. How does that compare to our trading partners?
One of our big problems in Australia, and this is certainly something that AI Group's advocated for strongly in the budget, is returning Australian public finances to sustainability. We've had a really big increase in effectively the share of the government in the economy since the pandemic, not just during the pandemic, but it's continued since that time. Federal spending is going to peak at 27% of GDP next year, which is the highest level since the late 1970s in a generation. This is the biggest tax and spend ratio that we've had for 40 years. But it's not sustainable to keep this going. Australia's debt is going to just cross over about 1 trillion Australian dollars this year. And all the budget forecasts say there will be structural deficits and structural increase in debt for the next 10 years, out to the end of far as anyone can estimate. It just gets bigger and bigger. That's going to be a cost for our economy, because we have to either service that debt with interest payments, or we have to cut services to make up for it, or we have to raise taxes to make up for it. And so a proper process of fiscal repair needs to be done in this budget, with a particular focus on a lot of spending lines that have really blown out in the last few years. One that's attracted a lot of public attention has been the NDIS, but there's lots of others that follow the same pattern. And returning those things to growth in line with GDP, not 9 or 15% a year, is going to be really important, that we can get that under control so we don't have to raise taxes and we don't have to cut services in the future.
And in this environment of heavy protectionism, there is a lot of pressure for governments to invest in industry and industry programs. So we address that in our industry paper. What do we consider, money well spent and those parameters? And Jeff, what's the last recommendation that we've made?
Well, there is also some issues, and I mentioned productivity earlier, particularly in AI group space of industrial sector. But there are also some big productivity issues that contribute to those fiscal sustainability issues in the government sector. Three of the biggest industries contributing to employment are what we call the non-market sector, which is it's public administration, health and social care, and education and training. And these can often be private sector industries, but they're often government funded. So ultimately, they're not playing in a market with pressures, but the customer ends up being the taxpayer for these private sector industries. They've been growing at a phenomenal rate over the last couple of years with increasing government spending. In fact, 4 in 5 jobs created in Australia in 2024 were ultimately supported by taxpayer funding. But they've also got very low productivity. And in fact, we've seen a nearly 20% fall in productivity in the healthcare and social care sector since the pandemic. That's one contributing to the productivity problem. It's contributing to fiscal sustainability. It's contributing to a lot of those cost of doing business pressures, because they push up the cost of everything. And we really think that while businesses need support to make those 3D style productivity enhancements, government does also need to do productivity work in the industries it pays for. And so we really think, because they employ about a third of Australian workers, that it's not a trivial thing on the margin. This is about a third of our economy that's in the kind of non-market government-funded sector. And we really need to see, we can't just let productivity and cost and regulation just go to hell in a handbasket in that part of our economy either, because it drags the rest down. So we'd like to see a productivity lens taken to government-funded programs as well.
And, there would be people who say, well, robots can't be showering elderly people, and, there's some sort of elements of that. We've got an aging population, so there's a natural growth. But there could definitely be some improvements in resource allocation, in, back office communication, a whole range of things that other areas of the economy has had to make those changes.
There is, in some care settings, you can't automate some parts of that, which is part of why their productivity is never going to be super. But there's a lot of basic stuff that could be done, particularly in digitisation space and things that we think is routine elsewhere. The example I always use is e-scripts. When you go to the doctor and you get your prescription in a little text message, they've had that in the Baltic states for over 15 years. And we couldn't do it in Australia. We still do the old paper script where you can't read the doctor's handwriting. It was only during the pandemic, when the doctors didn't want you to come because of COVID, that all of a sudden we got e-scripts. And now, I got one recently on a text message. I presume a lot of you will have too. But the point is we did that because of a global pandemic, not because of a productivity increase. But if you think of the productivity increases that unlocks, and the errors that the pharmacist can read the doctor's handwriting now, there's no reason we shouldn't be doing that all across health, education, those government-controlled sectors. They have been very laggards in digitisation, and there's no excuse for that.
Yeah, I agree. All right, well, which shows, again, 3Ds affect everything, including healthcare and aged care. Well, thanks, Jeff. Any last call for action?
It's going to be a very interesting time. When we're speaking now, we'll be having a federal budget in just under a fortnight. Australia's expecting a federal election probably a couple of weeks after that. And so a lot of the policy discussion is going to change pretty dramatically from the one we've just had. But these really are the core issues that whatever happens in the budget, whoever wins the election, what happens at state elections and budgets as well. So we're going to need to think about those questions of costs for business, productivity, tax, and are we going to be competitive in a far more difficult world?
So we wait for the election now. And for those listeners, you can read the papers. They'll be available on our website. And perhaps after the election, we might have another chat to see how we think some of these policy recommendations will track. Great. Well, thanks very much, Jeff.
Thank you.